Okay, so I am here with my fellow coworker, Jonah, and so we'll start with easy questions first. So,
Okay.
name, where you live, and what's your job title?
Okay. So my name is Jonah. I'm in the North Georgia area, basically about an hour north of Atlanta. And I've been in the business for I think 6 years now. This is my sixth year in the business. And what else did you want to know?
What's your job title? What do you
Oh,
call yourself?
I'm a loan officer. I really look at myself as more of a advisor though than just a loan officer. Like I try to advise people on making the right moves, and obviously I'm not just here to make money off somebody. I'm here to help you make the right financial decision when it comes to buying a house. So
I love that. I love it so much. So, Jonah also works for Premier Mortgage. He's powered by local lender there, or local
yep,
lender. He's local lender and he's powered by PMR. But his business is real different than mine, and he's been a top producer here at Premier since he joined the company. And I wanted to share his story because he started a bit different. I mean, I asked how you got started in the mortgage industry, but honestly, like it's part of your family. And so talk
yeah.
about that.
I kind of got born into it a little bit. So I had two different industries in my family. I had the automotive industry and then I had the mortgage industry. My mom's side of the family was all like in the automotive industry, turning wrenches, that kind of thing. So that's what I originally got into because that's what I really enjoyed. That was something that I just enjoyed doing that, and then did it for about 6 years as a career, and then realized like, okay, there's not a lot, not enough money in this to create the life that I want to create, right? And then there's also not enough like work-life balance / freedom. You don't have any freedom whatsoever. Like I was tied to someone else from 9 to 5 every single day, and I just hated that. So that's when I went to my dad, who I watched. He was in the mortgage business from the time I was born, really. So ever since I can remember when I was a kid, he would be talking on the phone with people, telling me to be quiet when we were being loud in the background, whatever it might be. And he would just kind of I basically just watched how much he was able to be a dad to us and how much he was able to be around and that kind of stuff. And so that kind of told me like, okay, that might be a good career to chase, but I'd never done any kind of sales job or anything like that. Just, I was a pretty quiet person, like pretty reserved type personality. So I didn't know a sales job would really be good for me. So I was like, hey dad, do you think this is something I could do? And he's like, yeah. He's like, anybody can do it. He said, just be prepared to kind of fall on your face. If you do, if it doesn't work out, you can always go back to doing what you're doing. So I was like, okay, I'll give it a try. And got my feet wet in the business. First year went pretty well, and I felt like I kind of grasped it a little bit, and I felt like I could build from there. So I just kept doing the things that I was doing the first year. A lot of things that Dad had taught me, and things that I just kind of picked up on my own. And things really for me, building my business has always been more of just like building friendships than it has building a business relationship. So I've always tried to look for people that I can work with that enjoy working with me, that are not always just super high strung personalities and that kind of stuff. People that I can enjoy working with. You know what I mean? And I'm sure you see that too in your business. Like you see people that you can and people that you can't work with. And so I had some run-ins with some people that I couldn't work with, and I was like, okay, I need to get them out of my life. I can see that that's going to make this job not nearly as fun. And then I started kind of finding the ones that I did like to work with, and really a lot of the ones that I did like to work with were people that were my age getting into the business as well at the same time. And so I just started building those relationships with as many young people as I could in the business, realtors, other loan officers, that kind of stuff. So I really just tried to build as many relationships as I could locally with young people in the business, and that's really done well for me. I would say probably 90% of the people that I work with today are people that I met within my first 2 years of the business, and I'm still maintaining those relationships. So hopefully that never changes. But I just try to do a
Yeah,
good job of maintaining those relationships. So
that's so awesome. I mean, so when you got in, how did you identify those people? Like, so you would have started before pandemic, right? So you started maybe
yep,
19-ish,
it was
18-ish.
2018 was my first year
Yeah.
actually originating. Yep.
And 18 wasn't like 18 and 19 were kind of harder years, I think, and
Yeah.
so and then 2020 trip out your front door and find loan. But
Yeah.
18 and 19, so you started in a very organic market, I would say, like a real
Yep.
traditional purchase market. And
I
it
would say
was
it was,
great because
you
you
know,
had support. But my question is like you were trying to you were trading time for dollars right over here in the automotive industry, and you're like, cool, I'm going to get into mortgage because my family has a basis of that. I think that that could be a good industry for me. I'm an introvert, and that this is not really my jam. So how do you start? I mean, if somebody's an introvert out there and they're like reading the book and they're like, okay, I'm an introvert, I'm like Jonah, I'm not sure.
So you kind of really just have to, I say I'm an introvert, but then I say that to my wife and she's like, you're not an introvert. Like, you talk to anybody and you'll walk up to a random stranger and have a 30-minute conversation like it's nothing. So I guess maybe I'm not an introvert, but sometimes it makes me uncomfortable just to go have conversations with people that I don't know.
Me too,
right?
Man. After 30 years, marketing, I still get uncomfortable. I think some people have that gift that that's their superpower. They're like, I love it. I'll go to any marketing event and I'm charged up about it. I'm like all sweating as I have to go.
Yeah. You just like feel like you're going to say something wrong or people are not going to like you, whatever. So, but for me, I really just had to get over that. I was like, look, because I think what happened for me was I closed the deal within about, I want to say it's about 60 days of getting my license. And I saw the paycheck, right? And I was like, wow, that's a really nice paycheck. Like, I've never made anything like that in a 1 or a 2 week time or whatever. And so I was like, you can really make some good money in this business. And then closed a few more deals. And I was like, man, I've already almost made what I made the whole year, in the automotive world. And I was like, I was almost, in the top tier of the automotive world. I was a master tech with Honda. So like I'd pretty much made it to the height of my career, except for maybe a couple of small raises throughout my career, but it was nothing, I was pretty much there. So I was, in the first year in the business, I almost made what I made in automotive the year that I left. So I said, okay, I at least replace my income so I know I can make it. And then I just kept trying different things, obviously marketing on Facebook, Instagram, that kind of stuff, videos, that kind of stuff helped, but I wouldn't say it's what made my business. I think what made my business is I really made sure that the people that I promised something to, I always made good on that promise. You know what I mean? Like if I told them I was going to close something on time, I made sure it was going to be closed on time. If I told them that I would get them whatever rate or whatever, I made sure I got them that rate, even if it meant losing money on the loan, whatever it is. I've always, and even to this day, I do that. Like I'm not ever trying to like make a profit on someone over what I told them. You know what I mean? I want to make sure that they feel like they got what they were expected,
honesty and honest and have integrity in your business, right?
Yeah. And I've tried to maintain that even to this day. And sometimes that means you're not super profitable on a loan, but it's okay. I mean, there's other loans out there and you're going to get other loans. So, so that's pretty much what I did from there. So, I mean, I would say really what I started doing is I just started going out, trying to meet with people and, just find people that I felt like-minded with and I knew that I could build a relationship with. And
they were newer in the business, so you identified them by when they, kind of when they got their MLL,
their real estate license.
Yeah, whatever you call it. Yes, in whatever state you're in, whatever state. Yes, their real estate license.
So yeah, whenever they would if I found a new realtor, I would just if I felt like they were going to be somebody that was going to be good on the real estate side, I would just consistently follow up, over and over, like, hey, how you doing? And sometimes you would feel like you're annoying them, but at the end of the day, it would end up you would get a deal from them. Like a couple of guys that were starting to produce that I was meeting with. At first, they wouldn't send me a deal. And then, I just kept in there until the guy that they were working with at the time messed something up and they were just looking for a second opinion, made sure I answered the phone, all the time whenever they needed something. So yeah, I mean, I would say really it just comes into nurturing relationships until you can't nurture it anymore. You know what I mean?
Yeah. So how long, I mean, what's your advice on how long? I mean, did you call every week? Did you text? Did you email? What was your kind of contact mechanism?
I used the Reach app on my phone for the longest time. And that was basically, I put every single realtor I met in that Reach app and I would add them to the list every week and I would send them either a rate update or some kind of helpful information on Friday afternoon. And I would just text bomb like 200 real estate agents every single Friday afternoon. And some would reply, some wouldn't, you know what I mean? So like you would get some response, some wouldn't. And then some, you would text them 5 times and they'd finally respond, you know what I mean? So like, it's just a consistency thing. That's all it is. It's a game of consistency and odds. And, once you get that one agent, responding with you and corresponding with you, then you just kind of lock in on them and say, hey, how can I help you grow your business? Anything you can help, anything I can help you with? Is there anything that you need, that you need me to show you how to do, or whatever it is, even if they need contract help or something like that. Maybe it's not something that we're supposed to know how to do, but I mean, I've seen enough contracts that I can help them write a contract, you know what I mean? And so, really just things, I would say just try to be as helpful as I could for people. And then just, I mean, things just kind of naturally progress from there.
Well, you did that. So now you're using the Reach app. You're texting weekly. You're being very consistent about that, whether it's a video message or a text message, and you're sending it out to those agents. And then I know that part of your initial business, you were in TikTok and social kind of media. That was part of your global strategy. Now maybe that's evolved because you've solidified agent relationships now, and so it's changing, right? I think that's key to be aware of. But talk about that kind of journey you went through and how it helped you.
Yeah. So I mean, I would say definitely use like TikTok and Instagram a lot. I tried to like grow some sort of following on there, but it's really hard in the mortgage industry to like create really engaging content. Like there's just not a lot of exciting things to talk about in the mortgage world. So you can only talk about rates so much, and you can only talk about what is happening in the mortgage world so much. And some people are really good at that, but that just eventually for me, it just kind of burned out, and I was like, okay, this is just not going anywhere. I just wasn't getting the engagement and stuff, but I do think it helped me from a business building standpoint that I was confident enough to continue doing that. And people saw that, I mean, people, agents that I work with and previous clients, that kind of stuff, saw that consistency. And I can't say that I, directly got a deal from a video that I made ever. But I can say that I know people would say, hey, I've been seeing your videos, they look good. I appreciate the content you're putting out or whatever. And so I stuck with that, did that for about 2 years, pretty consistently. And then, my business got to the point now to where it's pretty much, I would say, on autopilot. I mean, right now it's a pretty difficult market, but when the market is moving at a good pace, it's on autopilot to where, I've got enough previous clients reaching out to refinance or purchase again, whatever it is. And I've also got those same agent relationships. I mean, I would say over my career, I maybe have met with 300 real estate agents, and I probably still have the same consistent like 25 or 30 that I hear from throughout the year. You know what I mean? And sometimes you might hear from them once a year or every other year or whatever it is. But even those relationships, I still check on them and maintain them and just make sure they're doing okay. I mean, some of them have gotten out of the business over the last year or so just because we're seeing a pretty big slowdown in the real estate market, especially here in the Southeast. But I think it'll come back. You know what I mean? It's going to come back around and that kind of thing. And then for me, those relationships, so there's one office specifically in my market that I've always tried to make sure that no matter what, I maintain a good reputation in, because they have a preferred lender in that office, but nobody likes the preferred lender. And so I can get so many deals out of the office because I have a lot of agents in that office that like me, and they will refer me to another agent. So probably once a month, I get a referral from a new agent in that office. It's like, hey, so-and-so told me to give you a call. They said you're really good at what you do, and, we just want to work with you. We've tried working with the preferred lender, and they just don't do a good job. You know what I mean? And so
you're the disruptor. You're the disruptor because that preferred lender thinks that. And so hear Jonah on this. If there's a preferred lender for a brokerage, that does not mean you should not be marketing it.
No, yeah, that means you should see how that preferred lender is doing, and if they're not doing good, that means market it twice as hard, because really you can pick up so many good relationships. Because I'm telling you, the small producers in that office might use the preferred lender enough to keep them paying the bill or whatever that they're paying to be the preferred lender in that office. But the top producers, they want somebody that is also a top producer that understands how important it is to get things done and just handle business. And a lot of times the preferred lenders just can't do that because they're too, in my experience, they're too slammed with like getting calls from 50, 75 different agents throughout the day that they can't really take care of the important relationships in that office. So I actually have a couple offices like that I've picked up pretty big agents out of, because the preferred lenders in those offices were not able to maintain those relationships. And I think also a lot of agents, they want a relationship and not a paid, dollar for dollar relationship. So once you kind of establish a good relationship with someone, they're much more likely to call you over the guy that is paying to be in their office because that guy's paying to be in the office. You know what I mean?
Right.
And so that's something that I've noticed as well, that they just, I don't know, preferred. I mean, I'm not saying it doesn't work to be a preferred lender and, be an in-house lender or whatever at a big brokerage. But from my experience, I've never seen any of them that were like killing it because they were the in-house lender.
Right. Right. Well, and I think your key is your business has become relationship based versus maybe when you started, you're like, and I think that's another thing, here Jonah is 6 years later being a top producer and his business has evolved, right? You're willing to knock down any door and talk to 300 agents for a full 2 years before
Yep.
you solidified your core group of agents and had another 4 years of really success that you could hyper focus on those, say 25 or 30 agents. So I think that that's really good advice, because a lot of loan officers are thinking, okay, that first 2 years is a grind, and
Oh yeah,
you can't,
for sure.
if you quit, you quit yourself, because
Yep.
most likely you've washed out because of, not because of any market, I don't think, but it's because you didn't do the fundamentals right. Because
I think,
you were getting
I
paid
can
a ton of
definitely say
money,
for
but you were
sure.
like, I'm making enough to pay my bills, and I'm going to keep grinding it out, right?
Yeah, yeah. And for sure, the first 2 years were like, I mean, there was times where I considered quitting because I was like, I'm not getting any deals in or whatever, And then you hit the roller coaster, right? Like you have the no deals for a month or two, and then all of a sudden you got 12 deals in the pipeline, then no deals, and then so I went through that, and I still, I mean, even 6 years later, I still see some roller coaster in my business. It's not completely gone away, and I could probably prevent more of that by being more proactive in like chasing new business. But right now I've got a baby at home and stuff like that. So just there's more important things in life than like chasing. But eventually, I'll get back to that chasing thing. But right now, like I would say my business is consistent enough to, I'm still making great money and still able to run a profitable branch and all that kind of stuff. To where it's taking care of me throughout this time where I wanted to step back a little bit. You know what I mean? And you're able to take those steps back if you need to for a couple months and let the thing kind of be on autopilot and that kind of thing. So, but yeah, 2 years is at least, 2 years is the big grind for a new loan officer to be able to consistently have, business coming in. Some people may be able to do it sooner than 2 years, but in my experience, I mean, it's usually 2
And
years.
I think you're right. I think even though you said you can't tie back a deal to social media, I do think that, those views and being top of mind as the new guy in town, right? They're like, new guy in town, you were a disruptor because they kept seeing you on social media, And yeah, you probably couldn't tie back an actual transaction to posting either on TikTok or Instagram or Facebook or what have you, or doing a reel. But I think that you could probably say, hey, people knew me when I did go to an event, and they're like, hey, I've seen your video. So
Yep.
I do think that if you're newer in the business and you're trying to get more well known in your area, be famous in your town, so to speak, famous in a small town, I think that that's a good way to do it, right? Because every other mechanism is pretty expensive, and getting your name out there and being visibly seen by those players in your market, I think that has to play a little bit, right?
Yeah, and I'll tell you another thing that I did that was really helpful, and it doesn't really work like it used to anymore because of the way that Facebook Marketplace has changed. But I used to I would call listing agents on Facebook, and I would ask them if I could market their listings on Marketplace. So I'd reach out to the listing agent and say, hey, do you mind if I make a listing with your listing on Marketplace? And if I get a buyer out of it, I'll send you the buyer back, and then we can work with them together. And so back when housing prices were like not crazy and things were a little bit more affordable, you could post like a $250,000 house on Facebook and it would get like 2,000 clicks in a couple of days. And I would have so many messages in my inbox that I could not. I literally at one point I hired someone just to go through the messages and just to answer all the messages, because I would say 1 out of 100 might qualify for a mortgage, right? But if you take the time to find that 1 out of 100, you've got a deal that has no agent attached to it that you can now go hand to an agent. And so I did that a lot. And I've done it up until like last year. it just doesn't, with the housing prices the way they are now, and also Facebook Marketplace kind of changed their algorithm or something to where it's hard to get the traffic on them. And now there's companies that you like pay to do this exact thing, but this was kind of before that became a thing. It was just something that I tried. And so you could try, play around with that idea, and I'm sure you can probably figure out a way. You can still go on there and generate people to talk to through your Facebook Marketplace Messenger app or whatever. But it just takes a lot of time. So like if you have, if you're busy, it's hard to like sit down and answer 50 people because they have a lot of questions and they want to, go through every little detail of it. But what I would try to do is I got them on a call, and then I would kind of go over an application with them and say, look, it looks like you should qualify. Let's go ahead and get you to apply. And then I would get them to do a full application, that kind of stuff. And I would say 20 to 30 deals throughout my career, I was able to take those deals and hand those to a real estate agent. And what I would do is, if the listing agent was too busy, or sometimes like, I can't tell you how many times the listing agent that I got the deal from, like the listing that I got the deal from, I would call that listing agent and they would say, oh, I'm too busy to work with a buyer right now, maybe during the COVID market or whatever. And I would say, okay, that's no problem. And then I would just look up the next top producing agent in that area and just immediately call them and say, hey, I've got a deal for you. And whether you've got a buyer's agent you want me to work with or whatever, just let me know and I can get it over to them. And I picked up some good relationships off that, just doing something like that, just something simple. And it was free. It didn't cost me anything. Like I didn't have to pay, I wasn't boosting the ads or anything like that. It was just 100% free. Just working the meat off your fingers.
Right,
Yeah.
right. Which is a great idea, right? I think
Yep.
you've got to think outside the box, right? And I think you've done a really good job in your career to think outside the box. And your dad's been a good coach to you as far as
sure.
to coach you to think outside the box on how you build your business.
Yep.
I love that so much. So obviously, when did you say I'm going to be good at this? Like when you replaced your salary, or when, did it come a few years later and you're like, I can do this for my career. And now with a new baby, you're saying I found some work-life balance, and I've made friends with the people around me. So they want me to be with my baby, right? And my new baby and my wife. But I mean, there must've been a point that you're like, dude, I'm going to be good at this. I can do this.
I think it was like year 2. I realized like, when I started, I was able to pull deals in, and the market wasn't great. I would consider the market that we were in 18, 19 kind of similar to where we're at right now, maybe a little better in terms of housing prices being cheaper. The problem that we're in right now is rates are up and prices are up. Back then, rates were about the same as where we're at right now, maybe a little bit lower, and then prices were just cheaper. So things were still cheaper back then, but I would say the activity level was about the same. And so, I realized like, okay, I'm doing pretty well for my second year in the business. And, second year, I basically tripled my income from what I had made the year before in the automotive world. So I was like, okay, that's pretty awesome. Like, I want to keep doing that, and you, as a new loan officer, even 2 years in, you'll have these thoughts that like, oh, what if this year is the year that it all stops, right? Like it just stops working and I'm, all of a sudden my business dies and, whatever. And like, even to this day, I still get those thoughts sometimes like, oh, what if I've now hit the end of the line, you know what I mean? But then every year I usually outdo myself and I'm like, okay, it's obviously not just by happenstance, right? It's not just the market. It's not just me. Like I'm doing something right, And so just have that confidence, if you're new in the business and you're doing well. I mean, I would say right now doing well is 3 deals a month, 2 to 3 deals a month. If you're doing that, you're doing something, because that's a pretty difficult task right now. And so, if you're consistently closing 2 to 3 deals a month and you're having lots of conversations, you got people calling you, then you're doing something right. So keep with it and just keep doing what you're doing and just have consistency, because that really, at the end of the day, is what will lead you to being a top producer.
Absolutely. Could not agree more. So let's see. So what are some of your non-negotiables? Like even now with you, having a baby. Now Jonah says he's taking a step back, but he's still a baller, friends. I'm just telling you right now, he's still doing a lot of units, like double-digit units. So when he tells you he's taking a step back, whoa, he's taking a step back sort of, he's
Yeah.
still a baller. So I just
I'll tell
want
you
to
a
point
really good
that out.
processor though. That's a key. Is a
Yeah,
really good
good
processor.
teammates make a big difference in your life, right?
It
But
does. Yeah.
so what's some of your non-negotiables? Even now, though, there's certain things you do, whether it's communicating on Fridays or your agent contacts. I mean, I'm guessing those are still very much in your wheelhouse every week, right?
Yep. Those are in my wheelhouse every week. I'm still making contact with every single agent that I, actively do business with every single week in some way. And normally that comes through natural conversation, right? Like a lot of them then will just text me at some point throughout the week and say, hey, have you heard from so and so, or hey, I referred you so and so, whatever. And then I'll just kind of have a little conversation with them, maybe 3 or 4 text messages, hey, how you doing? How's the family? Whatever. And then and then obviously, also I live in I wouldn't say small town, but semi-small town. So like, if we're out eating dinner, the chances are I might see somebody that I know, and I'll have those conversations, that kind of thing. So, but yeah, definitely a weekly conversation with all my top producing agents. I would say top 10 to 12 agents are definitely getting some type of weekly conversation. And then non-negotiable is I'm never going to miss a closing date. That's one thing that I will pride myself with is to this day in my career, I've never missed a closing date that was my fault. You know what I mean? And so I really don't think I ever want to let that happen. It's always been, something that was out of my control or whatever, that if a closing date got missed, but to this day, I've never been the cause of a missed closing date. And I always want to keep it that way. So.
Love that. I love that. So
and I think, in my
go ahead.
opinion, you're only as good as your last deal, right, to the agent. So
Absolutely.
even the agents that you've been working with for 5 years, you're only as good as your last deal. So PMR has been, super, super helpful as far as being able to maintain those promises that we make to be able to close a deal in 12, 14 days, whatever it might be, to get the deal done. Having a good team in the back room to be able to get that done is you can't compare that to anything. That's so important.
Well, and I'm remiss to do this, but I'm going to do it. So you've been in both sides of the world. You've been in an IMB and you've been in broker world, and you talk about consistency and processes. Maybe somebody's out there going, well, I want to be in broker world because I'm only doing 1 to 2 deals a month, but I want to make I want to make more money or have the lowest rate or something like that. I think that just what's your take on that? Just broker versus IMB, because I think you traded one for the other because you wanted a different level of service.
Absolutely.
Maybe.
Yeah. So I was IMB before I went broker. So my first 4 years in the business. Yeah, 4 years in the business. I guess this is my 7th year. So yeah, first 4 years in the business were IMB with a really great company that did a great job. Felt like a family. You could go and talk and get things done and know that things would get done. Great company, but unfortunately the market ate them up and just it ruined the company and it was no longer a thing. And so we were fighting for a team of about 30 loan officers at the time and trying to maintain that team with without losing all of them to the broker world, because everybody was making a move over to the broker world. And I think this was, what was that, like 21 maybe?
22 maybe, when after the taper
21,
tantrum
22,
when
somewhere
rates
in
went up.
there. Yeah, when rates went up, and then everybody was like flocking to the broker world, and everybody thought the broker world was going to be like this next greatest thing. But so we went and did that, and I closed about 60 transactions in the broker world, and I have never felt more stressed out during that time period. I think it was about a year. No, it wasn't a year. Maybe about 6 months that we were in the broker world. And I've never felt more stressed out during that 6 month period than I have in my career any other time, because you just lose all control of the transaction, in my opinion, in the broker world. Now, some people can do great in the broker world. Maybe you're closing 1 to 3 deals a month, and that's comfortable, and you're sending all the deals to one lender, whatever. They're all going to UWM or whatever it might be. You're not brokering at that point. If you're really brokering, you are, finding the lowest rate for the client with whatever lender's there. Can they get that deal done? Yada, yada. And so, like, I had a couple months where I had, 15, 17 loans going, and I had 5 different lenders working on those loans, and they have 5 different compliance requirements, and I got to do all these different cost of cures and all this kind of stuff. Like, I just felt like I was running around like a chicken with my head cut off. And so finally I got to about 60 deals, and I was like, this is not working. Like, the rates are cool, like the rates are good, whatever, but I don't have to have the lowest rate to be able to to do my business. You know what I mean? And I keep myself, I keep my margins competitive. I'm never going to try to, make 500 basis points on a loan when that's just not doable. So I keep my margins competitive in the IMB world, and I still get the backroom support that I need to be able to get the loans done. And honestly, like right now, this has been the best 2 years of my career because I can literally take a loan and I can get, take the application, get them under contract, get it locked, and I literally don't have to touch that loan again from the time, until it's done, like after it's closed. And I might talk to the borrower, 3 or 4 or 5 times, whatever, talk to the agent, let them know how things are going. But I literally don't have to, like, I can't tell you how many loans I've literally not clicked into on Invite because Pam just handles all of it. So a back room just makes sure that everything is done properly. And that gives me so much time just to go out and market, talk to agents, and spend time doing marketing events or whatever it might be, things that really bring in the business. And just knowing that I have a back room, that's going to get it done is
Well,
I
and
can't compare
I
that to
love that you
anything.
brought it up because I think that sometimes people think if I have these low rates, I can get more deals. But and to your earlier point, you're only as good as your last transaction. And I've
Exactly.
always found that in my 30-year career. Back when I started in a IMB, but then went to a broker world and then shifted it back into IMB. And I always just felt like I was dropping my kid off at a daycare. I didn't know who was running the daycare, So
Exactly. Yep.
I think that it's not that it's bad. I mean, it obviously works for a lot of people, but with that said, you're going to have to be an exceptional loan officer, and your stress level, you're going to have to be okay with it being, I think, higher. And for
Yeah.
me, I think top producers that consistently want to bring in business and have that, consistency in their closing process, I think that's why I wanted you to bring it up, because I do think there are two different animals, and I think there's probably good on both sides. But I do think that for those of us that want to grow larger businesses to top producers, you need the consistency in processes. To your point,
Yep.
if you don't have that and you're worrying about cost of cures or disclosures or sending it to multiple places or what have you, then you don't have as much time to market. And honestly,
Yep.
we should be spending 50 to 70% of our time marketing for new opportunities, not
Yep.
worried about the current loans, right?
Especially in a market like this, because like you can have the lowest rates on the town, but right now there's always going to be somebody willing to do it cheaper than you. And so, yes, maybe someone's shopping me, but let me explain to you my process and let me wow you on the front end. That way you don't even consider shopping. And something that I've done in the last 2 years that totally changed my business. I would say this is probably one of the best things that I ever did, and I still don't see very many people doing it. I don't know why, but I do a video pre-approval. So I use my webcam and I use a software called Loom. You can also use BombBomb or any of those. And I'll record my screen. I record everything. So it's full transparency to the borrower, and I let them know exactly what they're pre-approved for, what types of loans they can get approved for. And I spend 10 minutes on every pre-approval doing that. And it's so much better than a phone call because they can see what they're looking at. They can understand it much more than they can on a phone call because they can see me changing the numbers and putting, adding down payment or, changing the interest rate, whatever that might be. So they can see all that while I'm working through their pre-approval. And then it gives me the ability to like really talk through the fine details of it. And so I would say it cut down, number one, on the amount of phone calls I have to take after a pre-approval by like probably 70%, right? Because
Wow.
people just understand what they just saw and they're good. They don't have any other questions. They're good. And if they do have questions, they'll send me an email. Hey, I saw the video. Thank you so much. It's great. Very helpful. I got 2 questions. And then they'll send me the questions. Then I answer the questions right back. But that has been probably the best thing that I did. I do one video at pre-approval, and then I do another video at time of contract once they go under contract to let them know what their interest rate is going to be, go over their rate options, that kind of stuff. I try to give people 3 different options to choose from as far as interest rate goes, and that seems to help with shopping around. So that's something that I've done that kind of minimizes people from shopping around as much as I'll try to give them 3 different options to look at, and I'll go over all 3 different options, what their different discount looks like, all that kind of stuff. So I would say, like, for me, that's probably the largest amount of time I spend on someone's loan. So like if I got 2 10-minute videos and 30 minutes in a pre-approval, I've got less than an hour in one loan. You know what I mean? And then it's so buttoned up and so ready to go by that point that I can hand it off to Pam. a good processor, and I literally don't touch it again. I just go get another loan. And so that's probably one of the best things that I did for my
I
process
love that.
over
I
the
think
last
that's
year.
a fabulous idea. And you're probably not spending too much money on having, a software, paying a company,
Yeah, it's like
to do
$100.
that.
I think it's $100 a month for that software, and I can record as many videos as I want, and you can go in there and edit them, and it gives them an AI breakdown of the video, and so they can go through and read it, and it basically puts every word that I said into a format that they can, understand it quickly and read a couple paragraphs, and it'll basically summarize the entire video. So
Love it.
really helpful software. So it's
Great
called
idea.
Boost.
So you've been in a purchase. Your main source of business is purchase, but you're after 7 years or 6.5 years in the business, you're building potential refinances for your future, right? So your
Yep.
database, you're marketing your database too.
Yep. Yep. Market the database. Obviously, PMR does a great job of having a team that basically handles that for you, right? I mean, obviously, I get calls a couple times a week of people, hey, we're just wondering about refinancing. Is it a good time to look at it? Whatever. And I mean, a lot of people right now, I'm just telling them like, hey, just keep hanging out because I think rates are still kind of on their way to moving a little bit lower. So like, I don't think I'd be in a hurry to refinance right now. So I've got a lot of refinances probably sitting there in the pipeline, but just not a lot that makes sense at this time.
Right.
Yeah.
Yeah, I'm with you. Okay. So, how do you feel about AI? You're a young guy,
I'm
tech's
excited
the
about
thing.
it. I think AI is going to help us in so many ways and make our jobs so much easier. I think there's ways that it can potentially hurt us a little bit, but like, I don't think it's ever going to replace a relationship. It's never going to be human enough to be able to replace someone trusting you with their finances. And yes, you might have the 740 score, 20% down borrower that's gotten 13 mortgages and he understands the process inside and out, and he doesn't need a loan officer to explain things to him. But that guy's pretty rare, and that guy's probably going to Rocket Mortgage or somewhere else anyway. So like my chances of me getting that deal are already pretty slim. So I'm not really worried about that deal going by the wayside. But the first time home buyer that has lots of questions and doesn't understand the process and just wants somebody to hold their hand and like help them understand it and be friendly and kind and help them feel excited about buying a house, AI is never going to be able to do that. AI can help you grow your business, I think, I mean, if you watch AI, in my opinion, AI has basically doubled itself or became twice as good every single month since it was released. And so I can imagine 2 years from now what it's going to be able to help us do. I don't really know exactly how it's going to affect the business. I mean, I'm hoping it's going to help with automated underwriting and all those kind of things are probably going to get better, I would imagine. So I'm excited about it. I think it's going to be a cool thing in our industry.
Well, and I like that you think it's helpful, and I do think it's going to be helpful. But you and I probably can both agree that in my career, I've looked at thousands of loans, maybe tens now, but anyways,
Yeah.
loans, and no two are alike.
No.
There's never
Yeah.
been two clients, unless they come back as a repeat client, that
Yeah.
are the same in nature, right?
Yeah.
And so I think treating each loan uniquely, and I agree that a computer can't treat each loan uniquely. It can't. It can. If you are the vanilla unicorn borrower, I agree with you, right? You put your
Yeah.
data in, you got 800 scores, and you work in 40-hour-a-week job, and
I mean,
you
you're already
qualify
seeing that
it.
kind of like on the HELOC pre-approvals and the Nifty thing and all that kind of stuff. So like you're already seeing a little bit of that. Like, hey, if I'm super vanilla and it's really easy loan, like yeah, we'll give you the money. You know what I mean? But like if it's a person that has like ton of questions, I just don't see people. I know me, like when I use AI right now, I'm like pretty unimpressed with how personal it feels. You know what I mean? I don't think it's really going to be able to get any better. Maybe I'm wrong. Maybe it will. Maybe eventually you won't even be able to tell it's not a person. But hopefully we'll like regulate it a little bit to a point to where it doesn't get that way. But yeah, so I think it's going to be a good thing for our industry.
Social media scripts, I think that's great. Helping you write emails, helping you with text ideas, helping you with, reaching out to your database. I think that's awesome.
Yeah. I've used it to help generate content ideas. I mean, I can sit here and have a completely blank mind on content ideas for hours. And I'm like, what do I need to make a video about? And you just ask AI to give you a list of video ideas from Mortgage World, and it'll give you ideas that you would have never thought of on your own. So, that kind of stuff. I think eventually you're going to be able to make AI video content with it, and it's going to be able to basically put you in that content, and you're not even going to be able to tell it's not you recording that. So that's going to be kind of cool. Be able to just type something and say, hey, make me a video about this real quick, and then I don't even have to take the time to like get dressed and put a camera in front of me or anything.
Put a suit on you, and you're going to look amazing.
Yeah, exactly. So, but yeah,
I think
it's going to be a good thing. I think it's
awesome.
Going to be a good thing.
Okay, so let's see what other questions I have. This has been fun. So if you're a mid-level LO, like that 2 to 3 units, and they're wanting to push to the next level, what's any advice for that person that's trying to kind of push their business up?
So consistency in your business. So have a good process built before you ever try to move on to that next level. I've seen so many loan officers that I know personally that are stuck in that 3 to 5 loans a month. That's like a great month for them is 5 loans, right? And they're like, man, I just can't figure out why I can't get past that 5 loans. And then I look at their process. And I'm like, you have no process. There's nothing there that is consistent about your business. You do something different every time you get a new client in. And so you've got to have consistency, build a process, take the time to build a solid process. That's what I started doing, the video pre-approvals and I do that for every single person, no matter what. If they come through, if they, fill out an application with me, I'm sending a pre-approval, they're getting a video in their inbox that has, all the details of that. So get a consistent process. And let me think here. So if you're trying to go from 3 to 5 loans a month. I think
can't be a control freak, right?
Yeah, don't be a control freak. Like, let the loans go. If you find somebody you can trust to work on your loans, like, there's way too many loan processors out there to be working with somebody that's not doing a good job on your loans. So find somebody you can trust with your loans and let go of the loan and go find another one, because that's really all it is. You are running out of time in your day to where you cannot go from 3 to 5 loans because you're so busy working on these other loans that it might feel like you're really busy, but then you look at it and you're like, oh, I only closed 5 loans this month, but I felt like I was super busy. I can close, on a good month. If I close 15 loans, sometimes I feel like I worked like 12 hours that week. You know what I mean? Because Pam takes care of all the loan stuff, and my work for me is just, replying to text messages and answering phone calls and, maybe going out and meeting, having coffee with a couple agents throughout the week or whatever. But like, I would say once you'll know when you find the right process for your business, and everybody's process is a little bit different because everybody's a little bit more of a control freak than the next guy, or whatever it might be. So you'll know when you find the right process, because you'll close a loan and you'll go, wow, I didn't even work on that loan. Like, it just closed and it's all good. You know what I mean? And not every loan and not every client is going to be like that. I mean, I still deal with difficult clients that I have to call 15 times a day sometimes. You know what I mean? But for the most part, I would say most people, I have a few conversations with them up front, do their pre-approval. Pam takes over on the loan. I lock the loan. They know what their numbers look like. They might text me 2 or 3 times throughout that 30-day process of buying the house. And then from there, they close on the house and we find another client, and then we put them in the database and we're following up with them when it's time to refinance and, that kind of stuff. So,
yeah. So consistency, processes, and support, right? Those are key to your business.
Yep.
And then marketing. Right. So because you have consistency and processes and support, you have more time to go market to get yourself from 3 to 5 to, 8 to 12 to 20 or whatever you're shooting for. Right.
Yeah.
Awesome. I love it. Okay. So last thing. And this is big for me. So what is your why on your hardest days in this business? Because it's not all sunshine and rainbows every day. I mean, if we all want it, if you drink whiskey, you understand that it's not all sunshine and rainbows, because you sometimes want a glass of whiskey or wine, but or a hot tea for those non-alcoholic drinkers on your patio, or porch. But what's your why on your hardest days in this business? What keeps you charged up? And maybe it's different now that you have a family than it was when you first started in the business, right?
So I think for me, it's always been what this business provides to me as far as a work-life balance, like being able to be my own boss and go do whatever I want whenever I want is I can't imagine having to go back to work like a 9 to 5 where I had to be under someone's thumb all the time. Like, I don't know what I would do, but so that is a huge huge thing of like why I come back every single day and grind it out and, work through the hard loans and, deal with the people's bullcrap and that kind of stuff. So that's one of my whys. And then obviously just the gratification of helping someone get from a point where they felt like they weren't able to buy a home. I mean, I just talked to these people on Friday, and these people were making $300,000 a year combined income, 740 credit scores. They had plenty of assets, like easy down payment, first time home buyers, and they're paying $3,500 a month in rent. And I'm like, so we went through our conversation on the phone. I was like, yeah, you guys are like in a great position. Like you need to be owning a house. And they're like, yeah, but when we read about it online, it just sounds so scary. I'm like, that's crazy. Like stop reading online and go buy a house.
Stop looking at the media.
Yeah, like you are in a perfect position to buy a house and probably own some rental properties and that kind of stuff and create some wealth for yourself and create a future for yourself and wealth with real estate and like that situation. And then you have the first time home buyer that has $12 in their bank account and you're trying to figure out how to get them in to buy a house and that kind of thing. So it's just I love the difference of each story. Like everybody's story is different, and I love seeing that all come together. And then I try to go to every closing if I can. So like as long as they're local to me, I try to go to the closing and meet the borrower in person and that kind of stuff. So getting to meet them in person and seeing their excitement of, hey, we got the moving truck packed up, we're moving in today, that kind of stuff. So just really that is probably my biggest why.
I love it so much. I love that you shared your story. I love that I'm on the same team as you. It's an honor to work with you. And thank you for being part of this project. And I'm excited for it. And I of course know where to find you if I need a follow-up call for more content. But this is so much good stuff, Jonah. Thank you so much.
Yeah, thank you, Mandi. I appreciate you taking the time to do this and chat with me.
Okay. Well, Candace, take it away.
Oh, I got nothing to say other than I love listening to these. So thank you, Jonah. I appreciate your time.
Yep.
Okay.
If you guys have anything else, just give me a call, okay?
Okay, bye.
See you later. Bye.